Hey guys, welcome back to another video, and today we're going to be covering Shopify, the second largest stock on the Canadian stock market exchange, only second to RBC. And earlier this year, Shopify did surpass RBC, but there's been a bit of a downturn in tech stocks recently, and Shopify dropped back to its number 2 position. If you guys enjoy Canadian stock market investing and just want to learn more about how to invest in Canadian markets, then subscribe down below. Also, this video is sponsored by Skillshare, but more on that later on. I've got 7 reasons to share with you guys why I love Shopify stock. The first reason is they have an amazing moat. So Shopify, the product itself, is super sticky. Merchants who go on the platform integrate their entire workflows on there, and it's very difficult for them to transition over from Shopify to another competitor like Lightspeed or BigCommerce. They also have other add-on services that help with the day-to-day operations of running a store. These add-ons help simplify day-to-day operations on the platform for merchants. And when merchants get onto the platform, get all these add-ons, and realize the value that Shopify creates for them as a store owner, then it's very difficult for them to leave. The second reason I love Shopify is because they have amazing financial statements. If you look at their balance sheet, currently they have about $1 billion in debt. However, they have about $8 billion in cash and cash equivalents. So this is more than enough to cover all their debt, whether it's short-term or long-term. And just so you know, the debt of $1 billion is all long-term debt. Shopify is currently a profitable company as of the past few quarters, as well as they are cash flow positive. The third reason I love Shopify is because they attract the best talent in Canada. So in Canada, when you're comparing the salaries here versus the salaries over in California, it's no comparison. Shopify could probably offer engineers about $100,000 to start in Canadian, versus if you were to get an engineer down in San Francisco, you'd have to pay them at least 120,000 Canadian dollars, or about 100,000 US. So Shopify is able to offer high salaries, but not as high as the Bay Area, and attract the best talent. If you're to go to the Bay Area, you have to offer top dollar like $140,000 to $160,000 USD to get the top talent there. But in Canada, as I said, it's no competition, and Shopify being able to offer a little bit higher than the rest of the competition here gets them the best talent to build their product. The fourth reason I love Shopify is their management is relatively conservative. I think this is a good trait to have because the worst type of people there are those who overpromise and underdeliver. So Shopify, they set realistic goals and set out to beat them. I think overall, this creates a lot more positive morale in the company, especially amongst management teams. Because if you're a management team and setting up goals that are way too high to achieve and you always miss them, then you feel a lot more demotivated at work. But if you set more realistic goals and tend to overachieve, then this gives more of a positive sense of doing something good at work from management and ends up having a huge impact on the way that they view work every day. Reason number 5 for Shopify is the fact that they're great capital allocators. Shopify not only works on its business, but they also have other investments in smaller companies that are pre-IPO. One of these examples is Affirm. And Affirm recently IPO'd, and Shopify had an unrealized gain of $1.3 billion. And Shopify doesn't just invest in any old company that has an amazing pitch, they look for companies that complement their product. So Affirm is a business that allows customers to pay in multiple chunks towards a purchase without actually having any interest costs. And this is kind of game changing, and the way that they're able to do this is that they charge a merchant a small fee. However, in exchange for that small fee as a merchant, the merchants typically get higher conversion rates on these products because people can spread out their payments over multiple months. So Shopify being able to invest in these companies that are pre-IPO, as well as having deep knowledge in e-commerce, gives investors in Shopify some exposure to venture capitalist deals. Reason number 6 for Shopify is the fact that COVID-19 accelerated businesses going online. Businesses realized they couldn't operate in the midst of a pandemic if they didn't have an online presence. So this forced a lot of merchants or mom and pop shops to actually start setting up shop online instead of just an in-store presence. It is very obvious that more merchants moved online because looking at Shopify's revenue, they were growing at around 95 to 100% year over year in the past 4 quarters, versus in 2019 and 2018, they were seeing about 40 to 50% growth year over year. And the fact that a lot of businesses added an online presence gives them an advantage over their competitors who don't have one yet. And going forwards, I think their competitors will definitely feel the disadvantage that they're at and eventually move online just like the rest of their peers. So Shopify's growth should still continue at fairly high rates, albeit probably not at 95 to 100% year over year, but I think that we could probably see somewhere around 60 to 70% growth in the following years. Now let's talk about today's sponsor, Skillshare. Skillshare offers thousands of inspiring classes for creative and curious people on topics including design, photography, freelancing, and even finance. Classes on Skillshare include a combination of video lessons as well as a class project to help solidify the concepts that you learned. Members get unlimited access to thousands of inspiring classes, and most classes are under 60 minutes long. They're ad-free, and best of all, they get straight to the point. The cost of Skillshare is under $10 if you're in the States, and for Canadians, it's $11.75 per month if you do an annual subscription. I personally have also posted my first class on Skillshare, so if you're interested, you can check that out, and I'll link that in the description. In the future, I plan to add another course which outlines all my steps for stock market research, and I'll let you guys know when that's available. Now, if you go down below and click on the link, the first 1,000 people who sign up with the link today will get a free trial of the premium membership so you can explore your creativity. The final reason for why I like Shopify is the fact that they have a fulfillment network that's supposed to rival Amazon's. Now, it'll probably take them quite a while to build that up. However, the biggest pain point in e-commerce right now is the fact that you have to ship through a carrier like Canada Post or UPS or FedEx, and they charge you an arm and a leg for a package. And the time that it takes for the product to be delivered to the customer is anywhere from 3 to 4 days. Now, in the era of Amazon Prime, 3 to 4 days is way too long to wait for a product. With Shopify fulfillment, if I'm able to get onto that one day, I'll be able to cut down my shipping times from 3 to 4 days down to 1 to 2 days and possibly even get a lower rate. Ultimately, Shopify I don't think is going to be in the business of making money off their fulfillment network. However, the game plan that I see going forwards is this fulfillment network will attract more and more customers onto their platform because they'll see the advantage of going with Shopify, paying that monthly fee, and getting 1 to 2 day shipping versus having their own website, maintaining that, as well as only getting 3 to 4 day shipping at a higher price. So I see the fulfillment network as more of a magnet to bring more people into the Shopify ecosystem and sell them other products on top of the monthly subscription. Looking at Shopify's stock chart, the stock has pretty much moved nowhere in the past year. And what's more interesting is that before Shopify reported the first quarter of 90% growth after the pandemic happened, is that the stock price rose from around $400 all the way to $1,200. And after they reported that first quarter of 90% growth, the stock has pretty much been flat since then, even though they've grown every single quarter after that by over 90%. So if you think about it right now, if you're buying Shopify around 1,200 or 1,300 Canadian dollars per share, you're getting in at the same prices that people got in last summer in July. So for me personally, I'm going to continue to dollar cost average into Shopify, and I've seen this pattern in the chart before. They're stuck between $100 and $200 per share. This is back in 2017, and it was range bound for about a year before breaking out. Now, I'm not saying that Shopify is going to break out in the next couple of months, but I think that there is a good chance going forwards in the next 2 to 3 years, we should see an uptick in Shopify's stock price. Ultimately, they are a huge player in e-commerce, but yet still a relatively small fish if we look at the grand scheme of things. But eventually, the e-commerce market will become more saturated, and we'll see who the major players are. And my prediction is Amazon obviously is going to be number one, but Shopify is going to be an even closer second, and possibly even overtaking because I see things on Shopify's platform that Amazon doesn't offer that merchants would rather have than going on Amazon. So those are my thoughts on Shopify right now. Let me know what your thoughts are down below on this company. Are you buying? Are you selling? Are you holding? And do you like this company? Why or why not? I'll have other videos on the screen if you want to check them out. If you're there, I'll see you there. If not, keep up the grind and have a great day.